And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning, my fellow friends and traders. Welcome to the Market Forecast. Today is Tuesday, March the 8th. I'm John Hoagland. Thanks for trusting me with your time as we try and seek accurate context in this increasingly complicated world. Welcome. Risk management is always top of our minds, as well as patience. It's going to be another interesting trading day today. We don't have a lot of economic information due out. It's mostly going to be headline news that may be driving these markets today. As usual, 7:30, we had the trade balance this morning. They were looking for 87.1 billion outlay. It's 89.7 billion. So 2 billion more in the negative for our trade balance. Apparently, the president is going to be speaking, I'm thinking around 10 o'clock Central, maybe 9 o'clock Central, 10 o'clock Central, on keeping, on Russian accountability. We'll see how that goes. U.S. stocks are set to open steady mixed this morning after yesterday's downside rout. More U.S. companies are cutting ties with Russia. The commodity du jour today is nickel. The commodity has had trading suspended on the London Metals Exchange. Price has reached officially 7 times the pre-pandemic prices. Apparently, a Chinese company had trouble meeting margins in a reasonable amount of time yesterday, which lit the fire that caused the short squeeze that we had in there yesterday. The exchange halted trade and now has canceled many of the trades that occurred after midnight London time. So, I mean, that's not going to affect any of us, but that is a big deal. And the extra price in nickel, according to, I think it was Goldman Sachs, adds $1,000 to the cost of an electric vehicle. So take that, Mayor Pete. Oil prices remain firm. We see price reaching session highs right now. More petroleum companies self-sanction Russian oil. News in Europe may be serious about weaning off of Russian energy. Where are we going to get all that energy? I wonder. As always, we are keeping our prayers and thoughts and everything on the safety and hopefully a quick outcome of agreement or whatever we can get from Russia and Ukraine. Of course, praying for all of those people. So hard to see, and I know we're all feeling it. Thank you, Rick. My brother Rick is saying that the president is speaking at 9:45 Central Time, so right between the 10 and 9 o'clock window that I was looking at that on. Make sure, as always, you hit the lucky like button. Share, comment, question, feedback, heckling, and love are always welcome here on the Market Forecast and the Market Recap. Subscribe to our YouTube channel. You can get notifications when we do go live. We don't have any group coaching today. There's the link for group coaching tomorrow. And here I'm going to put the link in for Make Hoag Money on Thursday morning about 8:20, 8:25, right after the market forecast. We're going into a Zoom room. We're going to take a look at the S&Ps. We're going to watch the open. You guys are going to talk and decide what kind of trades we should take. We're going to agree on it, and we're going to take the trade should there be one. So Always looking forward to this. I think it's a lot of fun, and if this is something you guys like, we're going to continue to do it and maybe add more opportunities for us to make Hogue money. I like it because I don't have to make the decisions. This is on you guys. So if you remember last Thursday, we took a short trade early in the session. We went our way for a pretty good amount and turned back at us. I asked if we wanted to cut bait or continue to fish, and the vote was to cut bait. So we made about 300 on that. Then I took another trade. We lost about 150 on it. So overall, we're up about $150. But I did pad the account a little bit last Thursday, so we're up about 1,000 in the account. Right now, we're doing this on SEM, much like a combine. If we succeed in this trading combine, maybe we'll take this live. I think that would be even more fun for us. All right, so VIX this morning down just under 2%, 35.82. The dollar index largely flat, just off its new 52-week high, 99.16, and the 10-year yield 1.85%, up a little bit. All right, got to say good morning to everybody. Drew, you win the prize this morning. You're first in the room. Rick, good morning. Jeff, Zorain, Mirek, Denise, Thora, Theo, good to see you. Manuel, Brody, Luis, John Doherty, the Dancing Bear is with us this morning. JD, it's good to see you. Dave Francis, Brian, James, Terry, Marcelo, Sarah, good morning. Prayers and a beautiful dawn to you as well, Sarah. Charles March, Shaw, good morning. Robert, Devant, Alfred, Shannon, Isaac, good morning. Laura, good morning. Dan, good morning. Vince, Dan, Scott saw, and he conquered. Three Lions Insight, good morning. Jeff Martin, Ngabo, Nico, Tachyon, hello. Expediter Dean, good to see you. Andre, Dan Emmons, Escalation Tuesday, Biden to ban Russian crude, Senate mulls seizing Russian gold reserves. Yikes, yeah, it's escalation Thursday, Tuesday, it seems like that may be right. Sean liked my quote, take that, Mayor Pete, there you go. It ain't even 9 o'clock yet. Good morning, no matter what they say. Talking to Venezuela for oil, that just blows my mind. That just blows my mind. We're going after the people that hate us to help us. When? Robert, good morning. All right, we've got a lot to talk about in these markets this morning. As always, we're going to start with the daily in the E-mini SPs. We'll go to crude oil. We'll watch the open there. Looks like it might be an interesting open for crude oil this morning. And all these markets are always interesting. There's always opportunities. Just make sure, again, think about context. Context is everything. Risk management is even more important, I think, than context. We always want to make sure that we're managing our risk well, taking trades that are asymmetric, smaller risk for bigger rewards, and it's going to take patience to do so. So why don't we go ahead and jump in and to start taking a look at our charts. Okay, this is the 30-minute on the S&Ps. Let's take a look starting with the longer time frame, starting at the daily. Okay, we had an overnight test and rejection below weekly kickoff low. The market drove to our weekly kickoff low yesterday. Within a couple of points of it, 41.85 quarter was the low yesterday, 41.82 even, our weekly kickoff level. The market looked below it last night. We're getting a bit of a, what would you call this, a dead cat bounce perhaps. We had a pretty big increase in open interest on this push to the downside. Volume was also higher in futures. It was higher on the New York Stock Exchange. So when we're thinking about an auction process, we're looking for higher volume and higher open interest in the direction. Structure is still to the downside. We've been range bound for a few days. We broke out of that range bound activity yesterday. We brought in volume and an added 53,000 in open interest. Now, rollover is due a week from today. I don't think I've ever seen rollover scheduled for a Tuesday. It's usually on a Thursday, but it may have something to do with the fact that the first day of the month was on a Friday. I forget how all that works, but so far all the calendars are suggesting that it's going to roll on Tuesday. we're going to be watching volume, watch on the forecast. We'll be watching volume. We'll let you know when we're going to be changing to the new front month, which would be the June M contract month. So that open interest and volume indicates new money on the short side, money coming in, betting on continuation to the downside. So far today, again, we've got rejection below this weekly kickoff level. Let's take a look at the 30-minute and see what we see here. Settlement 41.9850. Put that on your charts. Where did the market go? Well, it looked the higher, looked lower. We were opening basically with no overnight inventory. Potential for a gap. I guess it still remains. We've got a lot of time before the market opens, but so far it looks more like the market's going to open in range and inside of value from yesterday. Our pivot level, our important inflection level, is going to be that weekly kickoff low, 41.82 even. If we get the opportunity to see it. So far, I mean, you could say that this is a dead cat bounce. We got the big move to the downside yesterday. We haven't really seen much of a pullback. We're basically back in range, back in value. If that's the case, I'm going to try and stay patient. See if the market will bring opportunity as the day goes on. Now, we could have looked at that yesterday. We opened above value, got into value, and the best trade location of the day was obviously right after the open. Do we see that today? Do we not see that today? The probabilities are less, because if we're going to open inside range and value, it's telling us that the market hasn't really seen a change in value. One of the things that we do want to point out here this morning is we do have a late spike. Late spike yesterday. This late spike base is 42.06. If we open in or below the late spike, it's marking acceptance of lower pricing. Look where we are right now, 42.06, 42.0575. It's going to further complicate things for us. Overnight mixed inventory, nothing to look at there. Opening above this late spike, maybe rejection of lower pricing, and we could see this market continue to push higher and range into yesterday's area of value. If we do manage to create a gap or open below that 42.06 level, that might be marking acceptance of lower pricing, bringing us a test of weekly kickoff low, which I would relish. And then if we accept below weekly kickoff low, our next target will obviously be yesterday's low and then points lower. So much uncertainty and complication in these markets. I'm finding it better just to simplify things, to trade what I see in the profiles, trade what I see in the charts, and manage risk. It's of ultimate importance, especially when volatility sets in. So again, if we're going to be opening inside the range, which is basically inside the range, but in the late spike, that says something. Opening above the late spikes also says something, and opening below the late spike certainly says something. So there's some interesting opportunities and interesting things for us to be looking for as we open. Again, an open below 42.06 indicates potential acceptance of lower pricing. And anything is possible, especially with the headline risks that we have out here. Yes, Charles. Yep, late spike, 42.06 quarter, 42.06. I just call it just to, close enough for rock and roll. But yeah, 42.06 quarter is the finite number. So I'll be watching to see if we open in or below that. Seeing Rob Crust. Hey, Rob, how are you? I think that's a fine idea. You know, the overnight high targeted yesterday's point of control, volume point of control. If we get an opportunity up near last night's high and this point of control, it could offer us, number one, a way to limit risk, and number two, an opportunity for this market to fail up at this level and for the continuation to begin from there. I like that for a trade hypothesis. Let's see if it rings true. Let's make some money on it. All right, let's take a look at the crude oil now, continuing its route to the upside now, it looks like. This was scheduled to roll on the 17th, crude oil. That's St. Patrick's Day. And we got some time between now and then, certainly. It is coming into rollover. We were looking yesterday at the open interest that occurred the day before and wondering if that was in the front month or the back months or the next 2 months. It is yesterday we lost 23,000 in open interest on a push above an important inflection level that failed. The front month lost about 35,000. In the next 3 months, the total addition to open interest was about 12,000. So we lost a whole bunch in the front month, which is typical for rollover. And in the next 3 months yesterday, we added open interest. Does that give us an indication of potential continuation to the upside? It very well might. The news and emotion rule this market. We've been seeing since back here that the auction process hasn't been all that great. It's the fact that news has driven this market to this point, not technicals, and hey, it is where it is. That's what's ruling this market. So always, of course, supply and demand. The problem is the supply, and it's ruling this market, of course. I'm okay if this market falls into some sort of consolidation for the next week, which would allow our longer time frame traders to get their rollover done. But I don't see it happening again because this market is so emotional. Here's yesterday, kind of a smaller trading day, but still a big day. When we look at the overnight high and the overnight low, it's a $15 move. It's pretty big for crude oil, even at $120. Settlement, $119.40. Overnight inventory to the long side. The market has just opened up 3 minutes ago. We're going to take a look and see if the opening range trade would have worked. Sorry, we're a little bit late to that party, and it looks like it was left at the high. Let's take a look. Opening range left at the high, 74. Geez, these ranges are so big. 74 to 59. It's over a 74, 75, 70. It's almost an 80 tick opening range. That's kind of tough to take. But we know we've got a lot of overnight longs in this market. We know we're opening and testing above an important inflection level, that weekly kickoff high 122.40. We can easily come back and retest that level. Take a look at the 30. So a big opening range. Lots of overnight longs. If these overnight longs don't see what they're looking for, and that's continuation to the upside by longer time frame buyers, and I think they're going to be stretched to see that, we could see a pushback to, of course, weekly kickoff high and even points lower than that if we're really long in the overnight session. So again, the opening range trade, inhibitively large, probably nothing that I would be looking to take advantage of unless we get a deep pullback back into it, which would allow me to limit the risk to see if we continue back to it. We'll see if we get that. We may return to crude oil at some point this morning. Good morning, Federico. All right, NASDAQ. Same but different. A little bit of a different story here. Yes, we need to be drilling our own oil, Linda. I would agree with you there. Let's just take care of ourselves, take care of our allies. Don't feed the people that are out to hurt us. Anyways, NASDAQ, same but different. We're more than 20% off the all-time highs. This is, we're potentially getting pretty close to recession area here. Weekly kickoff, we closed below it. More of a potential continuation to the downside. Volume and open interest strong, adding 3,800 estimated open interest yesterday. Weak close. That close yesterday right on its POTUS. Also a late spike. Definitely a weak close. Overnight range below important inflection levels marks acceptance. 30-minute settlement right here. 13,320.75. 13,320.75. We've got a late spike. The base of the late spike, 13,665. No real overnight inventory. We didn't get too far from settlement, and looks like we're going to be opening a little bit lower and below settlement and below our late spike. The NASDAQ has been presenting as the weaker of the markets. It's still presenting as that way. Again, no overnight inventory. We open with the gap. If we can't close that gap relatively early, we know we've got the late spike. That's two nuances, saying if we open below the base of that late spike and with a gap, that's two nuances. If we can't close that gap, we're going to be looking for this market to continue the move to the downside and looking for opportunities to sell strength. Doesn't it make sense to sell strength already? Lower highs, lower lows. Gold, $22 above 2,000. Unbelievable. Price, volume, and open interest all higher. This is a healthy auction. We saw this coming when we had higher pricing against negative delta. We had just too many doubters in this market, keeping the eyes on the short side and just continuing to get run. You see the market running back basically to the center line here for the continuous delta. Yesterday, adding 19,000 in open interest on high volume. This auction is strong to the upside. We looked about this yesterday. Price moving higher, volume higher, open interest higher. All of those higher indicates a healthy upside auction. Take a look at the 30. Settlement, 1995.90. We've got some overnight longs here. We're already open. Didn't watch to see if the opening range was initially the high of the session, which I believe it was. It may not have held just yet, but we've got overnight longs, hopefully finding what they're looking for, and that is continuation to the upside. Upside structure is obvious. Flight to quality is on. Seek to buy weakness in this market. And you got to be careful with that because we've come a long way in a short period of time, not thinking that we're going to be seeing any major pullbacks before perhaps the end of the week. But we could just fall into some sort of range-bound activity up here. I don't think it's that likely. I think this auction is too strong to the upside. It's really going to take something to change that for us to start looking to sell rallies. I'm still going to continue to look to buy breaks, buy weakness in this market. We've got two upside nuances. We've got a very small late spike here, and we've got a gap to the upside. We haven't been able to close the gap and look to buy weakness. Look to buy weakness. The euro, which has been getting smushed, is in the teeth of rollover. It's probably going to be rolling over as far as volume is concerned to the June contract tomorrow. Volume and open interest are going to be very blurry. We added 1,700 in open interest on this push down below weekly kickoff low. But again, it's difficult to gauge volume and open interest during rollover. Weekly kickoff was pretty magnetic in the overnight session. Remember, again, we'll be checking the volume tomorrow morning to see if we're going to change to June tomorrow or the next day. Here's the 30-minute chart. Overnight inventory was pretty much moot, just kind of hanging really close to settlement and the weekly kickoff level here. I say just let them roll. I'm not that interested in being involved in this market, knowing that we're this close to rollover. Our overnight session inside yesterday's regular trading hour session, we may be getting a little bit long and short time frame here. But again, we've got yesterday's high with which to lean on. And again, weekly kickoff low, somewhat magnetic now. We've been spanning it since we got to it the day before yesterday. On Friday, Sunday night, Monday night into Tuesday. Tuesday, we haven't really gone very far from the weekly kickoff level. So I'm going to let the rollover play out before getting back involved in the euro market. Let's take a look at the 10-year. So we were kind of looking at the market yesterday during the day and during the close as a market that is really just kind of sitting here centrally located in balance, looking for the next volley, the next opportunity. The rates have ticked up, kind of offering opportunities, perhaps at the balance low here. Weekly kickoff low, our balance low. We're getting pretty cheap here inside that area of balance. And if we're going to be trading balance rules, we're going to be looking to buy weakness down here because, again, it allows us to limit our risk. Range-bound activity, we fade the extremes until there's a breakout that's substantial and accepted, and then we go with the breakout. So we're getting pretty cheap as far as opportunities against the lows here. Volume yesterday was lower. Open interest, we lost 33,000 in open interest. Not a whole lot of money coming into this market. And again, part of that could be because we know we have the FOMC meeting, which begins a week from today and terminates a week from tomorrow at 1 p.m. with some sort of an announcement. So we may just be settling in, waiting for that information. Here's the 30-minute chart. We got a pretty good gap here. We talked yesterday about the market being in short time frame control. Well, the market came up yesterday at some point and attempted to get to this point of control, which it failed to do. We talked about the fact that if we started to look to the downside, a test of this naked point of control was in the cards. Well, that's where we are right now. Settlement is all the way up here at 128.03 and a half ticks. We've got some shorts in this market, but they don't seem too interested in or too worried about getting out of some of these shorts here just yet. So we've got a gap. We can't close the gap relatively early. We might get our test of weekly kickoff low in a much more close range than we've seen just yet this week. Let's take a look at the nat gas and we'll get down to business. So this is a bearish piercing pattern. Okay, so the candle body is above the candle body from this bar, and it closes more than halfway through the body of the previous bar here. This is another bearish piercing pattern. Look what happened on that one. We've had lots of candlestick patterns that just haven't played out in this area of balance here, but we've come up to this. We're seeing a reversal pattern. We're seeing continuation of that reversal. The volume and open interest off that high yesterday. We added 5,300 in open interest on okay volume. Wasn't tremendous volume, but at least it held up pretty well. So the auction off that high does act a little bit healthy. We're continuing that move off the high. It seems as though because of winter, because of the war, because of everything that's going on, The speculation that natural gas is going to become very expensive has, I think, a lot of folks trapped long, and the market is taking them to the point where they're going to find the most pain. The market does that. It finds the pain, takes it there, gets everybody out, and then does what you think it's going to do. What does this look like on the 30-minute chart? So here's Friday, Monday night, opening below weekly kickoff high in the regular trading hours, continuing its push to the downside, an okay volume, adding open interest. Settlement, $4.83 approximately. And we've got all these overnight shorts in this market. We've tested down too, but not in the regular trading hours have we tested to this naked point of control, nor have we traded to this naked point of control, nor have we traded to this naked point of control. Our weekly kickoff low, there's still plenty of space down there, which continues to keep us somewhat in a range-bound area here. So the gap not being closed is it's a low probability that this gap is going to be closed. If it is, our overnight shorts and our short or any shorts that came into the market off the highs yesterday, have we taken out the longs that are currently in pain is really the question. If we've taken out the longs that are in pain right now, we could see that push back up to range from yesterday and even settlement. We've got a lot of overnight shorts here. Do we continue weekly kickoff low? Certainly the target and the visual target that I'll be looking for. The markets are always something to. Okay. All right. Let's see what else we've got here. The need to be drilling our own oil, wind power too. Yeah, I'm all for renewable power, but it's going to take time for us to get it to the point where we can lean on that and lean on that only. These are facts. Chris, U.S. leads global oil production of about 18 million barrels per day. 10-year consolidation breakout in gold. Silver up 61 cents. Nat gas double top. Certainly looks that way. Certainly looks that way. So, all right. What else? I think we're in pretty good shape here. Have a good trading day, of course. We're always looking forward to your success. We've got the coach's playbook today. Should be an interesting one. And then I'll be back for the market recap today at 3 o'clock. Looking forward to some more new educational opportunities for us. Working on some of those now. We'll let you know as soon as they get close and when we are bringing them out. But until then, we've got group coaching tomorrow. We've got Make Hope Money on Thursday, and then it's another week in the books. We all seem to be writing a book about our trading journey. Each week to me seems to be another chapter in a 52 chapter book. At the end of the year, we'll take a look. All right. So let's take our deep breath. Stay humble, grateful, creative, all those other adjectives that we think about when we're being good traders. Be your best trader today. Have your best trading skills present in your mind. Trade well today. Continue to pray for peace, freedom, and strength. Blessings to you all. Be good to yourselves. Be good to others. We'll see you at the Coach's Playbook about 11:30. Looking forward to seeing you there. Trade well today.